Hello, NAAIA community. Get ready to relive insightful discussions, gain fresh perspectives, and be inspired by the wealth of knowledge our community has to offer. Let's dive into another episode.
My 20 years in this industry, I've become a passionate advocate for wealth building and legacy creation with this tool of life insurance. I believe that we can close the racial wealth gap in one generation with this amazing tool if we use it correctly. I have spent 17 years of my career at New York Life Insurance, where I got to peek behind the curtain and to see how other races, religions, and ethnic groups use this tool of life insurance to create wealth for themselves and their families in ways that we've not been doing the same in the Black community. I created and ran the African American marketing unit, helped grow from 500 Black agents to 1,500 around the country. Best known for the campaign that I created and we completed to put $50 billion of life insurance in force by the Black agents for the Black community. The formula is to get 200,000 Black families to see the value of owning at least $250,000 of insurance. 200,000 with 250,000 will create $50 billion of guaranteed tax-free future income because we're all going to pass it sometime, right? So I'm proud to say $1 billion's been paid out in death claims. We've created millionaire Black families where they weren't before, not from a lottery ticket, but because they sat down and put a plan in place for a policy worth $1 million, right? So just happy to share that over the last 3 years, I've been working with this amazing agency, IMO, down in Greenbelt, Maryland, American Classic Agency. And the idea is to help build this Black-owned agency, build and become the destination for agents as we get frustrated with the major carriers, those quotas, support challenges, and not being under leadership like it looks like them. So happy to be here to contribute.
Agents here about the opportunity. In the world of wealth, the number one industry that creates wealth is financial services. It's not technology, it's not entertainment. There are people that do that, but the main industry that creates financial independence has been financial services. The interesting thing about that is about 8% of insurance agents are African American. So when we look at the racial wealth gap, I know Eugene hit on this first, that there's a racial wealth gap. When I first talk about the opportunity of working in insurance, because it's something that can help with that. So
when I started New York Life in this leadership development program, right, after 2 years, I got promoted to an assistant vice president. I got a letter in the interoffice mail that said, congratulations on your promotion. As a newly appointed officer of the company, we want to take out a $2.5 million life insurance policy on your life to benefit the retirement fund of New York Life. So you can imagine, I'm like, say what? Say what? Right?
Right.
Nothing for me, nothing for my family. This is just for them. So I asked some folks, what is this? And they said, well, it's common practice. I said, I've never heard it before. They said it's called corporate-owned life insurance. Banks do it. They call it bank-owned life insurance. Maybe you've heard of it as like a key man policy. They use it in a church or in a small business to tide over the business if something happens to that key employee. I'm like, well, it's great to know that they consider me a key employee, but let me ask you this. Where does this $2.5 million come from? To which they said, that's what the company values you at. Again, I said, I don't get it. They said, that's the worth here to them for the work that you do. I don't get it. They said there's different ways to calculate your value and your worth, right? The easiest way is to do a current value of your future earnings. For you P&C folks, what's your true replacement value as a person working within the company over to your family? They said, here you are, 30 years old, making $100,000 a year. We expect you to work here another 25 years at least, right? What's $100,000 a year for 25 years? $2.5 million. They said, what do you mean you've never thought about this? Haven't you thought about how you're going to invest that $2.5 million over the next 25 years? To which I said, no, right? They said, what do you mean you've never thought about this? Don't you have a $2.5 million policy on yourself to benefit your family in case you don't make it home tomorrow? To which I said, no, right? And they said, well, what would happen to your wife and your children if you didn't make it home, right? Would they have to move out the house? Would they not have the college education or the life goals that you set up for them? And then I became extra sad because I realized the company valued me more than I valued myself. I think that's the first big part of this value and understanding of life insurance, that you're supposed to be protecting your value, right? The other part is how to use it. I thought I had life insurance before the corrections officer in Florida. I had 1 times my salary, $36,500. These folks said they were taking out 25 times my salary to benefit themselves.
Oh, and I had a reaction for
Right. So, as an independent agent, I've been in the industry just 5 years. Prior to that, I was in public health. So part of who I am is always about helping and being a part of the community. And one of the things I am understanding, as Eugene has already said, that there is a lack. I think also that there is there's intimidation. People feel that they have to have a certain amount, or, what is generational wealth? There's so many things in terms of lack of education that we don't have. And the one thing I appreciate about being independent or an agent, period, is to be able to have that personal relationship, because, we're so used to, in these industries, people come in as a sales pitch versus, okay, well, do you really have my best interest in mind? Because maybe this family can't afford to get a 2 million key man, or 2 million policy on themselves. But even if they do 50,000, well, that's a start, because it's better than zero. And each generation, in terms of generational wealth, it builds upon generations. So if you're the first generation to lay the foundation, it may not look like what it's going to be on your children's children and your children's children. So that for me is something that is always important, is that I like to be able to meet people where they are, to help them understand, your success is not mine as long as you're okay with it. And that's something I think, that we have that ability and that opportunity to be able to bring to our clients.
I'm glad you mentioned the sales pitch part, because I know,
as a primarily property and casualty insurance, I work with a lot of small business individuals. And part of our life insurance conversation, I always point out to them that the most valuable thing to insure is actually the person themselves, not just their property. I explained that while we always insure things to their full value, as Eugene just says, replacement cost valuation, it's even more important to think about insuring yourself. And most of us don't do that. When I'm speaking to them, they don't consider that. And we understand that we're worth a lot more than these properties we insure, these homes we insure, these cars we insure. So it's very important to look at yourself as that important asset in your business, being a property and casualty, mainly insurance agent. And the best part about it is that I always tell them, I say, like home insurance and car insurance, those are mandatory. The banks demand it, and most municipalities, you can't drive without a car insurance. I said, you got to make life insurance a mandatory product for yourself in order to, protect those who depend on you. Because, life insurance is a love product. If you love individuals, you want to be able to have something for them, when something happens. And what I appreciate about these new products today is that you don't have to die to use them. They have, accelerated benefits, whether you terminal illness, critical illness, chronic illness. So, people are so used to the life insurance policies of old, where the only way you can get anything from it is if you pass. But today I explained to them, no, if something was to happen to you while you're building your wealth, while you're starting that new business, if you don't die, because most people don't die, they get sick first. And you can get some of your death benefits. So that's important. I always explain to them, and I make it a part of our property and casualty, conversation all the time to personal lines clients. It's also small business owners. So it's a very important thing to talk about.
It's almost like a deer in the headlights, guys. We're all educated here, and we know. But when the rubber hits the road, we really have to take these young people under our arms and say, hey, listen, here's what we're going to do. We're going to take baby steps. First of all, for a new family, let's get a term policy in place. Maybe that's $300,000 or $400,000, and walk with that for a year or two. Because those are just the things that we have to do. And all of you guys is listening. I know y'all know some of those things. So as an agent, I understand the wealth side of it. Do I have a whole lot of life insurance? I do. Most of our people don't, even right down to my daughters and my grandkids, because it's tough, you guys. And that's because where we have been historically. So if we're able to, what I do is once a month, I'll have 10 or 12 people, and I have a conference room. I'll bring them in. I'll have donuts, coffee, whatever it takes. And we talk about it a little bit at a time. Once a month, I'll invite them in. Drip campaigns through email. My agents, every single phone call, we ask the question, do you have life insurance? We have to get there before we can get to that wealth conversation.
Create, as agents and advisors on the call here, is a values campaign around life insurance. See, I think it's not a needs issue in our community. We have money, right? It's not an awareness. Folks know what life insurance is, but we don't value it. We don't value it in a way to create, to protect ourselves and to set up our families, right? And I think one of the major ways I think we can do that, and what's missing, I think by design and on purpose in our community, we don't see the stories of impact. And I don't know if you want to call them success, but when it's worked, when it's been in place and it's worked, right? Well, one of the stories I want to tell you, Daryl, because it comes back to your living benefits there, Jason, right? There's one of the agents I work with at American Classic Agency, Crystal Hollingsworth. She said she had a client that came to her and said she wants $1 million of term, but she wants the cheapest one going. And she's like, I'm not going to sell you the cheapest one. If we're going to do it, I want to do it right. At least, for a few dollars more, get something with living benefits. Yep. Those who don't know, that means if you get a chronic illness, a critical illness, right, a terminal illness. I think some carriers will do it if you have Alzheimer's now, a critical injury. Mm-hmm. You can advance off the policy face amount to take care of yourself. Long story short, this client, 3 years in, says she has a pain in her side. And somebody says, if a pain lasts more than 3 days, go to the doctor. So she's like, well, maybe it's the appendix or something. I go to the doctor, and the doctor says, well, I have good news and bad news, right? The good news is it's not your appendix. The bad news is you've got 4th stage cancer. We're giving you less than a year to live, right? And so she calls Crystal back and says, listen, you talked to me about these living benefits. What can I tap here? And by the way, I just got laid off from my job. And she's like, listen, I'm going to call the company. And they agreed to advance $780,000 on that $1 million policy to her while she was alive. And she didn't use it to go buy clothes, bags, shoes. And, she used it to buy some investment property because she knew her income wouldn't be there for the family, right? She didn't have children of her own. She paid for her nieces and nephews' college educations, right? She was able to get her treatment. So she did a non-traditional treatment as well as the chemo, and she extended her life just over a year. But and then after she passed, they still delivered another $120,000 to the family. I'm saying, so here's a millionaire Black family created from this tool of life insurance that they didn't have it before, right? And especially, Ernie, as you said, the living benefits, I want us to be aware, in our community, we have hypertension, we have diabetes, we have health issues that we know are going to come up later in life. That's why we have to ensure that and make sure that our younger generation value it and purchase it while we're young, right? So when you're young and healthy coming out of college and you have all this, this great health, great energy, you're still thin and looking strong, right? That's when you need, I'd say, the $1 million policy, Ernie. So you can do dime, right? The debt, the income, the mortgage, your expenses, your kids' education. That you can, if you don't make it home, you can spend $1 million really quickly. But it's like numbers that we're afraid of to talk about in our community. I know $1 million's too much, but it's not. And the last thing I'll say is,
and the word that has come to my mind, and it keeps repeating, I actually put it when I was sending out the invite for this: perspective. Eugene, you hit on it. It's perspective. I'll give my story, personal. My mom, when my children were born, she purchased insurance for them, traditional whole life. I also have now like a 20-pay whole life on them as well. My oldest son, he's now 19, but around his junior year of high school, when we were going for his sports physical, the doctor found a heart murmur. So, of course, that halted that process, and we had to go through the process of going to a cardiologist and different things like that. Now, thankfully, and praise God, he is literally on the fence. So he was cleared, but that could have been worse. And so, that I shared that story with some people because, again, we think we're going to live till we're whatever age, or, I'm not going to get any type of situation. My son was in perfect health, but sometimes things happen. And I was grateful that we at minimum had those base policies in place, because had that been a worse situation, for those of us that do life insurance, we know some of the questions deal with, well, have you had a heart, EKG and this and that. And I don't know how you're going to rate my 18-year-old at that time, or 17, even though he's young, he could have now had a higher rate, so it's like, sometimes it is just about planning, no, we don't want to talk about it. But at the same time, I think that it is our jobs as agents, as their advisors, that we have the hard conversations. Otherwise, why are we here?
So if I may, so when I talk about life insurance per se, premium is always a factor in anything we do. So we can't avoid that, So we address it a different way as well. We let them know that when you're looking for life insurance on the P&C side, you can't, because with auto or home, they jumping from Geico, Progressive, just for premium. But on the life insurance side, I say you can't look at it like that. You got to make sure the life insurance policy that you're purchasing, this company's going to pay you 40 to 50 years down the road. So you can't look on who got the cheapest. Oh, this one was $10 cheaper, $20 cheaper, because you want to be able, that life insurance policy to pay out a death penalty 50, 60 years from now. You understand what I'm saying? So you want them to make an underwriting profit. You want them to be conservative. You just don't want them to be able to write anybody. And I let them know that when you purchase a life insurance per se, you have to be approved. You have to qualify for life insurance. So you got to be in good health. You got to have a lot of things working in your favor. So you can't put that off. Like you can put a policy off, or I'm going to switch to this carrier later on. You got to make that decision today, because tomorrow you don't know what your condition may be. You may be like they were just alluding to, somebody found out that they was hurt, but they didn't know that prior. But if you had that pre-existing condition and you knew about it, you can't get life insurance after that and not put that on the application, because that's misrepresentation.
I was just going to jump right in there as to what Jason has said, and I'll come back to everything being relational. Just last week I had two young men. One is entering into the NFL draft, okay? And one has already been hurt in the NFL and he's back out. And y'all know the NFL stands for not for long, okay? And that's just a fact. So although he made a lot of money, but I hate to say it, but his agent just didn't set him up with life insurance in the right way. So we were looking at two different things. One guy's about to make a lot of money. One guy did make a lot of money, but that money's already gone. So that is a different conversation that we'll have with a young man who works at Walmart. That's a different conversation for, a young man starting out with a new family. And like Eugene said, we start at that $1 million term policy and kind of graduate it up. And even if we do a whole life policy, they can overfund it. And those are conversations, we'll talk about as we go along in the webinar. So that's just what I kind of wanted to add to that.
You think about life insurance, don't think of it as another bill, right? Think of it as build, B-U-I-L-D. See, your car insurance, your home insurance, this is, you're taking it out hoping that the house won't burn down, that you won't get into an accident. You know what? One thing we're all guaranteed in life is that we're not going to get out of life alive, right? So we're going to pass at some point. Why don't we put something in place to make sure that we can pass something of significance on to the next generation with that? Like you said, with the living benefits, you can benefit from it while you're alive as well. That's, if I may, just put in context, because I love that we have so many agents on the line here. When you take our Black history in this industry, the first Black agent to cross the color barrier was back in 1957. So we have Black insurance companies, of which we have no more until Magic Johnson is putting money back into Atlanta Life but they're not underwriting insurance, right? They're facilitating other purposes. But where I go with this, Cirillo McSween was this gentleman's name. So he was the treasurer for Martin Luther King, an amazingly accomplished man. He made the $1 Million Roundtable his first year, 26 years thereafter. I was able to spend some time with him. And I asked him, well, what made you cross the color barrier? What you had? So he said in 1957, he couldn't even be in the office at the white company because they wouldn't let Black people in the office. There was still segregation at the time. So I said, what were you trying to do? And he said, life insurance can help families to create an estate, and they have to make them see the value of leaving a legacy. So life insurance creates an instant estate. Ernie, as you said, that young man with $1 million of insurance, he has $1 million estate now. So now you could talk to him about, what are you going to do with that, right? You don't have to show it. You don't have to be consumer. You don't have to brag about your cars, bags, clothes, and shoes if you have $1 million estate. It's mindset. I think mindset first. I go into the book about it. I appreciate you, Rebecca, putting the link to the book. I appreciate Rod Powell for acknowledging all that we're putting up here. So create an estate and leave a legacy. See, whether you have a home to pass on, whether you have money for the college, life insurance can always pass on something of significance.
Yep.
You said it there now, what other communities are doing. Chapter 6 of the book, rich people plan for 3 generations, poor people plan for Saturday night. So these other communities, they'll insure their parents, they'll insure themselves, and they'll insure the children, right?
Yep.
So there's going to be 3 generations of making sure whatever you do for a living, however much you earn, whatever money you put in the stock market, whatever property you own, we still have additional income coming from the life insurance. Those are
Yeah,
some things I
absolutely.
want the agents on the line to think about. This is how, when you talk about, the family and introducing it, share what other folks are doing. They're insuring their parents, insuring themselves, insuring the children to make sure that they're being set up.
I played a race card real quick.
Can I
I'm talking
add
about life
something?
insurance.
Well, whether it's state or government that gets involved, I think when it comes to our Black and brown families, the importance is, if you think about history and how when they've gotten involved, it's like, are we getting all the information? If you think about property, down south or different places where it's like, I think it's all, the importance of it is, if it's going to work, make sure that whatever you're saying you're going to do, that it's going to be fair across the board and not impact one particular group of people more than another. Because that's what comes to my mind. If I'm supposed to, I was watching something on Netflix and it just made me think of that. Like, we had land all around, but they took it from us in different manners, and unbeknownst to us, that wasn't what we thought it was going to be, So I think, again, it goes back to when we started the conversation, it is about the trust. It's about the relationships, and how are the history of how we are being handled when it comes to wealth, generational, being able to have our own assets and property, life insurance, whatever it is, all of that factors into, how we respond when someone presents it to us.
Since out there, write this down. There's a book called Black Labor, White Wealth. Has anybody ever heard of that book? Black Labor, White Wealth, The Search for Power and Economic Justice. Please go back and read that book, write it down, grab it, get it. Because, most of us came up through the Black church, and many of us still are. And that the Bible says that a good man will leave an inheritance to his children's children. Guys, it comes back down to what our beliefs are. And I think, Eugene, you mentioned it earlier. We have to truly, truly educate. It takes time, and for me, it's not so much as the success of selling it. I feel good if I educate and I go back and I educate some more, build those relationships. I keep books in my office, whether it's Robert Kiyosaki's Rich Dad, underline stuff, make copies of it or give them the book. I keep copies of the book under my trunk, Think and Grow Rich. Being 64 years old, and God's blessed me, and I know he's blessed most of y'all that's over 30 or 40 years old. But empower our people with information. Give them these books, go buy them and that's an investment. When you give someone something like that, the edge comes off a little bit. Now they're saying, you're not trying to sell me life insurance. And even many of our ministers in the Black church, they don't have life insurance either. So we almost can't even have that wealth conversation until we talk about the wealth that comes from within.
Is that there's $19.6 trillion of life insurance in force in America. 19.6 trillion. What I believe is that Black folks own only 3% of that. That's why I said earlier it's about the coverage amount, not necessarily that we own. How much do we own? Because of that 19.6 trillion, people are going to pass every year. I think they paid out 100 billion last year. If we only got 3% of that and 97 billion went elsewhere, do you see the wealth gap continuing to expand? I think this is what we have to teach for our folks, that it's that we have to get in on this game. That conveniently, this conversation about closing the wealth gap, nobody's using life insurance as a tool. Talk about investments in the stock market. They talk about home ownership. They talk about all these other ways, but we're not talking about whatever the wealth gap number is. Whether it's $200,000, it's $1 million, depending on which study you're looking at. If I have a policy worth that much when I pass, won't I at least bring my family on par financially with that life insurance policy if I have a policy for that amount? I think that's the potential.
People, where I'm using life insurance. The financial pundits don't want you to. If anybody follows like Dave Ramsey, Susie Orman, or is like, buy a term, invest the difference, which I think all of us know nobody actually does that. And if you look at any bank, if anybody can hear the sound of my voice, if you look at the balance sheet for any bank in the U.S., they have billions of dollars in life insurance. Every single bank in the United States has billions. If you go to the FDIC webpage and look at their balance sheet, you will see every bank has billions. So I always tell my clients, the people that sell money, you should copy them. Banks sell money. That's what they do. So if you want to learn how to make a cake, you go to a baker and copy what they do. You want to learn how to practice law, you go to a lawyer. Banks sell money. So if they're buying life insurance in the billions, you should do the same thing. We had them here. Thoughts on trust versus wills. Do you need both? I'll throw that out there. If who wants to take trust and wills, do you need both?
I'll say again, it just depends on the individuals. The reason I chose a trust is because when I went to a financial seminar a few years ago, the moment I heard her say a trust is irrevocable, I said, well, then that's what I want.
Yep.
So that's all I got on that. Everything, it depends, everything is based on situations. For example, I have a customer who her dad died and she just wanted to make sure that she has a brother that has some disability. So they just wanted to make sure the house was taken care of. So that was something simple. But again, it's always case by case, person by person. I'm sure there's benefits to both. I'm not an attorney or lawyer, but just from personal perspective, that was mine.
If I can do a plug.
Yeah, go ahead. Yeah.
Amy Griffin, one of the best estate planning attorneys, the lawyer from NAAIA. Right. She started an organization, the Association of Black Estate Planning Professionals, ABEP, Association of Black Estate Planning Professionals. So you can go there and get, connected to Black estate planning attorneys who can help you and whatever the need is of that family, be it the will or the trust. Let the professional, those who went to school for this, talk about that. Because we have the agents on the line. There's something that I'd like to tee up as a different concept, I think, for many of us, right? And that's how, if you add up how much life insurance you have in force as an agent on the families that you've touched, right? So one of the brothers I work with at American Classic Agency, Joseph Juanini, we added up, he has $227 million of life insurance in force on the families that he's provided insurance to. Where I'm going with this, for the next 10, 20, 30 years, it's a fact of life. Each of those clients are going to pass. But as long as they're paying the premiums, he and the clients, the company is going to go back and deliver $227 million back to those families. The majority of his families that he's insuring are Kenyan immigrants. So $250 million is going to be passed out tax-free because of the work that this one gentleman does in his career. But I wanted us to think about our power and potential as agents and advisors in creating wealth. You can quantify that by adding up the policies that you have in force. I know most of us have, I see Forbes is starting to do it. They're calling them financial security professionals. I'm calling them black wealth builders.
So folks, when you guys look around the United States, the pillar that controls everything kind of is insurance. Every stadium's owned by an insurance company for the most part. So I always jokingly tell people, if a zombie apocalypse happens, the last thing that's going to go down is insurance companies. It won't be first, second, third. It'll be the last thing, because everything we have is based on this concept that's been around since boats were traveling with commerce across oceans. So realize the power that each of you has working in the insurance industry, whether you're underwriter, analyst, sales professional, principal, whatever you do, you're working in the industry that kind of keeps the whole nation going. And when you think about generational wealth, insurance is made for that with life insurance if you do it the right way.
Thank you for watching this flashback episode of NAAIA. We appreciate your time and hope you found the insights valuable. Stay tuned for more enriching content. Until next time, thank you for being a part of the NAAIA community.